Happy Sunday, guys. It's CVO Trades here. Today I wanted to talk about Elliott Waves. I just want to do a quick brush up on basic structure and then some things that help me with counting. I've seen so many counts on Twitter, and then I think that there's a lot of people out there that give Elliotticians a bad name, and I think in order to have better counts, you need other things to help confirm your counting. In my case, it'll be RSI and time. So just a quick agenda before we begin. We're just going to go over the quick structure, the basic structure. We're going to go over the cardinal rules. We're going to go over channeling, RSI relationships, alternation, and then some of my personal guidelines. So let's get right to it. This will be quick and brief, hopefully. So in Elliott Waves, there's always a 1, 2, 3, 4, 5. And then this is known as your impulse or your motive waves. So think of any time you get a 1, 2, 3, 4, 5, that's your trend. So think of those as setting your trend. Waves 1, 3, and 5 are all the odd number waves. Those will have subwaves in it. That will also have 1, 2, 3, 4, 5s like this. So they'll always have 5 subwaves in it. Waves 2 and 4, those are your counter trend waves or corrective waves, and they will always be labeled as with letters. So they'll always be ABCs, which are zigzags and flats. They can be WXYs. Those are complex corrections or double zigzags, triple zigzags. And then wave 4s can be triangles, which look like that, and then so something like that. So just remember that waves 2 and 4 are labeled with letters. Waves 1, 3, and 5 are 1, 2, 3, 4, 5s. So now that we covered that structure, the basic counts, let's think of the cardinal rules. So the first rule, wave 2 cannot retrace more than wave 1 or 100% of wave 1. So if this is inception of wave 1, it can never be like this. It can never breach. Okay, so it can't go lower than wave 1. It can go 99.9%, but it can't go lower than wave 1. Wave 3 cannot be the shortest of the impulse waves. So let's say that wave 1 is, I don't know, we'll just use this, $6,000 or 6,294 points. That means wave 3 has to be at least 6,300 points. It can't be, let's say it looks like, let me just take this out right now. It can't look like this. Okay, so if you have like a long wave 1 and then like that, it can't be like that. It has to be, it doesn't have to be the longest, it just can't be the shortest. So just remember that. The third rule, wave 4 cannot enter wave 1 territory unless it's a diagonal. So let's say we have our structure right here, our basic 1, 2, 3, 4, 5. So that means wave 4 cannot come here. I like to always label this as a red line. So if it breaches this, then more likely than not, the whole wave is either invalid or it's either completed up here. And what I find in my practice is that I always focus on the high time frame closes. So focus on daily closes. Wicks I think are okay if they're low time frame wicks. So if it's like a 15-minute candle and it's like that, I think that's fine as long as it's a high time frame close, because back then they probably didn't account for like crypto or like highly leveraged markets. And then what's a diagonal? A diagonal is it's like a wedge. So think of any falling wedge, rising wedge, like this. So in this case, this would be a rising wedge. So in this case, then it's fine for waves 2 and 4. Oh, sorry, waves 4 to come into wave 1 territory. So that's a diagonal. So we covered those 3 cardinal rules. Let's talk about the basic structure. So the basic structure, I'm trying to breeze this as fast as possible. So the basic structure, and then we'll talk about the market in motion here. So wave 1 wave ones will always be let's assume we're coming out of a bear market of a correction, right? So it's coming like this, and then let's say this is a falling wedge. We're coming out of it, and then we get some nice upside here. So wave ones usually would be pretty choppy, and it will look corrective, kind of suspect, right? So something like this, and then at this point, people are starting to get bullish and like, oh, okay, here we are, we're in a bull market, and then you get this deep, or you get this retrace right here. You get a wave two. So wave two, usually it retraces around 61.8%. We call that the golden pocket zone. So right here, so 61.8%, and the market behavior or the market emotion during waves two is we get true despair. So let's say we were bullish right here, everyone's calling for new highs, then we get this dead cat this pullback, this deep pullback. So think of wave two as despair slash like false breakout. Everyone's calling for new lows like this. This is usually the mindset of wave twos. And then you can think of wave threes as parabolic or vertical movements, right? So something like this. And then typically wave threes will have a lot of volume coming out of it, so you can expect something like this. This is usually wave three volume like that. But if we turn it off, I'll just make it up. So let's say this is the volume here for waves one, this two, and then waves three will creep up like this. That's wave three volume. To get targets for wave threes, you will take the trend-based fib, and it'll usually be 161.8%. So if I take this tool right here, trend-based fib extension, from the bottom of wave one to the top of wave one to the bottom of wave two, then you get, it should be normally around 161.8%. So something like this, and that's how you get your wave three targets. For me personally, I like to use the inverted fib. So you can pull it right here. So the inverted fib is that you just draw it from the bottom of wave two to the top of wave one, and it should be the same. Let's find out. Yeah, what do you know? It is the same. I'll make it a different color. Let's use yellow. And then make sure whenever you guys are using your fibs, make sure to check this box, especially for crypto, fib levels based on log scale. And we see here, yeah, it's roughly the same. So the reason why I use this inverted fib is that bots are usually programmed to take profit at these targets. And by bots, I mean like algos or whatever kind of script they put into the market. I usually find they take profit right here, okay? And that's how you get a wave three targets. Let me just delete it now, and then wave four. Let's say your wave two retrace 61.8%, and then there is something called, I don't know if it's called the rule of 100, but it's something about 100. Basically, that waves 2 and 4 usually like to equal 100%. So wave 2 equals 61.8%. Waves 4 will usually equal 38.2%. And the reason why is because it'll equal 100. And then vice versa. Let's say wave 2 is 38.2%. So if you get a shallow wave 2, you get a deeper wave 4. If you get a deep wave 2, then you get a shallow wave 4, and vice versa. If you get a 50% retrace on wave 2, then wave 4 would be 50%. It's not a hard rule. It's just a guideline slash like tendency or something that usually happens. And then once you get your wave 4s, and then just remember there's something called the alternation. I don't know if it's called the law of alternation or the alternation guideline, but basically if wave 2 is a simple zigzag like this, then wave 4 usually will be a different pattern. So usually it'll most likely be a triangle. It can be a flat, or it can be some kind of complex looking correction. It's not a hard set rule, it's just a guideline. And then once you have identified your wave 4 bottom to get your wave 5 targets, you can do the same thing where you do the inverted fib, and you get that. But another way, the more conservative way, is if you do the trend-based fib from the bottom of wave 1 to the top of wave 1 to the bottom of wave 4, and you do the 1-to-1 extension, which would be the right here, this one, so this one right here. So it's called a 1-to-1 extension of wave 1, and that's how you get your proper wave 5. And then usually in this structure, wave 3 is the one that will be extending, so the extension waves would look like that. And then sometimes, on a rare case, you might get an extension in wave 5 as well. It depends on how bullish the market is. Very rarely will you get, actually I don't think you can get 3 extensions in waves 1, 3, and 5. It usually is 2 of the waves, and very rarely will wave 1 be the one that extends. So now that we've covered the basic structures, let's see if I went through everything. We went over the 3 rules, we went over the textbook structure, and we went over how the motive waves / impulse sets your trend, the corrective waves are counter trend. We went over alternation. Now let's talk about channeling. So channeling, let's go over this. Channeling, let's say we set our waves 1 and 2, and then we set our channel from the bottom of wave 1 to the bottom of wave 2. You drag it to the top, and this should be to the top of the body candle close of wave 1. So now, let me get rid of this too. So when you're channeling, usually when you break out of your base channel, I like to call this the base channel because this is your wave 1 and 2 pivots. Usually when you're channeling, if you rip out of this wave 3 in a violent manner, then sometimes, or most of the time, it likes to retest / backtest the broken channel. So it'll kind of fade, and then you get something like this, and it's very bullish when you backtest it and you hold and then you continue up. That's very bullish in a channeling manner. So just remember that when you're channeling, impulses like to rip out of the channel, to backtest and continue on. If you fall back under the channel, then more likely than not, it's more like a corrective, and then it's not ready yet. So we went over channeling. Another thing in channeling, let's say that you set this pattern, and then let's do your 2. You want to set a trend line or a channel from waves 2 and 4 lows, and then you get this. Let's say your wave 5 ends somewhere around here. What I find is that when the asset comes out of this channel set by waves 2 and 4, usually the whole move is complete, right? So it'll come out, backtest, and then die. So what I find is that there'll be one finished cycle, or one finished wave, and then this will be the start of a correction. So let's look at what the waves will look like. So think of it like this. You have your impulsive wave 1, corrective wave 2, impulse wave 3, corrective wave 4, impulsive wave 5. You completed it of 1, 2, 3, 4, 5 Elliott wave sequence of an impulse, and then you start your correction down. And then let's talk about the RSI behaviors. So usually, let's do this. We'll do it here. Sorry guys. Kind of want to use this RSI to line up. So let's see. Yeah, let's say like this right here. This would be a very mock attempt at showing the RSI relationship. So the RSI relationship between waves 3 and 5 is that they're always, not always, but usually there's almost always bearish divergence. So bearish divergence is when you make a higher high in price but a lower high in an indicator. That's why when I use Elliott Waves, I always use RSI or some kind of momentum indicator to help confirm the strength of a move / finishing up of a move. So in this case, waves 3 and 5 will have a bearish divergence. So again, higher high in price, lower high in indicator / momentum, or RSI in this case. once you have that, and then another thing to note is that this RSI support has been tested and it's been respected well. When you break this support and you back test it, then the asset will die, or it would have usually that means the move is finished, right? So luckily we have Neo. We'll just use that right now as a better proper way to look at waves 3 and 5 and the bearish divergence. So you can see here, and then this also helps with me with counting. So you see here waves 1, I have my wave 1 here, and then when it breaks trend, that's usually a sign that's wave 2 starting. And then something to help me count that is that it also breaks trend on RSI, and it backtests, and then it comes down, and that sets your waves 1 and 2. So then let's see how it looks when you do your trend-based fib. So Neo looked pretty strong. It had a good extension. So waves 3 ended around the 200% extension, and then you have your wave 4 and then 5. And like I was saying earlier, when you have bearish divergence on a high time frame, the 3-day, so this helps me confirm this is 3 and that's 5. It's because there's bearish divergence. I sound like a broken record because I've said it so many times. And then once you get the breakdown, the RSI support, and then you get a retrace of 50%. And then actually it's more than that once you take into account the whole move. And then you can see it sets the trend, and it's just constant rejections the whole time. So we talked about the basic structure. We talked about RSI relationships with Elliott waves, mainly just the bearish divergence. But we also talked about how you can help confirm, how RSI can help confirm waves 1 and 2, because every time the trend support breaks, that usually means the wave 2 or 4 is starting. And then what else did we miss? What else I want to go over? So those are the core things, and then these are my personal guidelines. Let's talk about the 1-2 counts. I see so many people on Twitter insane 1-2s that it doesn't make sense to me. Implicitly, you cannot have a sub wave 1 being bigger in price or time than the parent wave 1. So what do I mean by that? Let's say you have your 1-2, and then I see countless people like this. Oh, 1-2, and then you go like that, right? And I'm just like, I don't know about that one, Chief. It doesn't implicitly make sense, right? When I think of nested 1-2s, I think of like that egg, whatever that egg toy is, where you just have multiple little nested eggs inside the eggs. This one has like a larger child egg, bigger than the parent. Like, does that make sense to you? Because to me, it doesn't. It really doesn't. And it's to each of their own. That's just the way I think of it. And for me, it helps your counts be more realistic and less chance of getting wrecked, especially in a trade. So I think I have a better representation here. Let me open it up. All right, so yeah, here. So 1-2, and this 1-2. This one is bigger than that, so I think that's invalid. The valid looking count is right here, where it's 1-2, subwave 1, 2, 3, 4, 5, 3, 4, 5, and then you continue on. The next thing I want to talk about was time. So in time, I have another illustration here. Let me pull it up. So for time, lesser degree corrections should not be taking longer than the higher degree corrections before it. So let's say, for example, waves 2 and 4 take around 28 to 30 bars. So in this example, it's 29 bars for wave 4, intermediate degree, and then minor waves 1, 2, and then 3, and then this minor 4 is 30 bars, which is taking longer than the parent correction or the higher degree correction. To me, that's invalid. Like I said, it's not a rule. It's just, I think it's an implicit guideline, because it doesn't really make sense to have a sub-correction being longer than the parent correction. So to me, this is invalid. This is why for a lot of counts, I don't think that's valid. The proper way, in my opinion, is that the sub-waves should be smaller than the parent waves in terms of time. So here, the sub-wave is smaller in time than the previous wave. In this case, minor wave 4 is 20 bars when compared to intermediate wave 4, which is 28 bars. That's the right look, in my opinion. And I'd like to emphasize the right look is one of the best things to help you confirm counting. So whatever has the right look, does it make sense? Does it look right? I've seen so many people so many times where it does not have a right look. So I've seen people adjusting their counts, saying, "Oh, we have a wave 1, 2 here, but we're just gonna make our wave 4 last maybe the whole length of the whole damn wave." So does this look right to you? Because it doesn't look right to me. What kind of wave lasts 100 bars, where wave 2 is like 34 bars, or like a year, right? It just doesn't. It just doesn't make sense. Like something like this, that does not look right. So just keep that in mind. Let me delete this. Enough of that rant for now. And then some other personal guidelines I like to think of is that usually some things need to take the right amount of time. So let's see if I can find a good example. People like to label the bottoms very quick, and then they find that they have to adjust their counts a lot. What I mean by that is they would like to label, oh, it's a wave 1, 2, 3, 4, 5 like that, but they have maybe just the start of the A wave, and they didn't account for this. They always like think, oh, it's wave 2 is in, wave 3 is starting, but in reality, it's something like this. So usually there's a time requirement, and I'm pretty sure this is more apparent in neo waves. I am no expert in neo waves, but I have some friends that are very familiar with it that have taught me well. Usually I think the minimum requirement for a wave 2 is it has to be like 23.6% of wave 1. So usually wave 2's, it should have the right look. I always go back to that. It has to have the right look. So that's just something that I find that in terms of time, if something is taking too long like this, and then you're trying to extend your wave, more likely than not, it's wrong. It's wrong. So I think I've covered everything that I wanted to cover. So we covered channeling, RSI relationships, alternation, the cardinal rules, the textbook basic Elliott wave structure, motive waves, corrective waves, and the only things we really didn't cover are the correction types. You can go, I might make a video later on going over that, but for time's sake, I won't go over that in this video. I just like to emphasize the most important parts to me. Basically, where is it? My personal guidelines right here are I'd call it CVO guidelines. 1-2-1-2 counts, child wave 1 cannot be bigger than both in price and or time than parent wave 1s. Lesser degree corrections should not take longer than the higher degree corrections that it's preceding it. So just remember the nested eggs. So if you guys aren't familiar with what I'm talking about, let's see if I can find it on Google. So think of it like, let me see. Think of it like this, right? So these are the nested 1-2-1-2s. So that's what I was trying to go for. Let me see if I think that's everything I wanted to cover. And then we can just look at, so one of the most common mistakes that I'm going to reiterate again that I see on Twitter that's so freaking annoying and cringing the whole time. People like to think, oh, this is a wave 4. Bro, in no way, I would bet in no way in hell is this structure a wave 4. How is a wave 4 113 bars and your wave 2 is 13 bars? Does that make sense? And in your whole, let me guess, the whole entire wave is smaller than that. Like, it doesn't implicitly make sense. Okay, so please, for the love of God, don't be one of those people that label wave 4s like this. And then something else to help you confirm is that your EMAs, once your asset starts once you get EMA crossovers to the downside, more likely than not, a major correction is starting. So here, crossover down, try to get back up, rejected, try to get back up, rejected, and we're still down, and now we're below the 244. So this is the more likely count that's happening on NEO. So shout out on, this is just a basic quick mock-up analysis on NEO. So this is what I think is going to be happening. So you can draw all your fib relationships. So like this, and then we'll just do like a quick mock-up and then how I would count this. So you can start doing this. Let's call this primary. So now we're in a cycle correction. Let's take out the waves, and then let's do your points of control. So here, this one. Here's another one, and then this is the one we most recently tapped. And then we'll just call this right here. And then let's do this. Oh, what do you know? We tested this channel, we back tested it. That's bearish, very bearish. Let's see any trend lines that are broken. Yep, every major trend line is broken and back tested. So more likely than not, we're bearish. Emphasis on bearish. And yeah, so that's what I think is happening on NEO. I don't know what the count is right now. Maybe it's like that. Maybe it's like that, and then you have maybe it's like that. All right, so that's what I think might be happening. Something like this. Maybe a possible count. Okay. Oh, another tip and trick for you to help counting when you're trying to do corrections. Invert the chart. Invert the chart, and then just really ask yourself if these were neutral colors, which way does it really look? This is the best way to keep an objective opinion, right? It's an objective way to help you with your bias. In this case, it looks like it wants to go this way, higher, right? So in this case, because it's inverted by higher, it's actually going lower. All right, so that's just a tip. And to invert your chart on TradingView, you hit the out key and the I key at the same time. And then we can do a quick study on RSI as well. So let's see when RSI support broke and it back tested. So here, broke. Now it's trying to back test, rejected again, and now we're continuing down. So yeah, I think I covered everything that I wanted to cover. Hope you guys enjoyed my ramble, my rant, whatever you want to call it, on Elliott Waves. And then the biggest two takeaways I want you guys to remember are these personal guidelines, how I use RSI and time to help confirm my counting. And that's it. It was a longer video than I expected, 28 minutes. I hope you guys enjoyed and hope you guys learned. Safe trading out there and take care, y'all. Peace.